Welcome back, folks. Let's go out to New York City and speak with Maria. Maria, thanks for calling. Thanks for holding. How are you doing today?
Hi, Steve. How are you?
Very good. Thank you. Thanks for asking. So how can we help you?
Yeah, you help me every day, Steve. So this is just a matter of another help I'm asking. It's just I'm trying to improve a bit my understanding of those markets. And, you mentioned the red line and everything. So I was wondering, this morning, Stevie's red line on the daily on the NASDAQ was around, I think, 69.45 or 47, I can't remember. And the price oscillator was green, right? And
yes,
the
above
market
zero.
Anyway, above zero. And the market cruised through it and went all the way to 69.63. And that was more or less the 61.8% retracement. So at one point I was thinking, okay, it's going to go down again on an ABC day, but at the same time we are above Stevie's red line, the daily one, and the price oscillator is positive. So is it the right position to be short the NASDAQ at that price, at 69.60? And I was wondering if it's because the Stevie's red line is valid on a daily. So I mean, basically I have to wait for the end of the day to see where my NASDAQ is, to know that it was a test and a rejection, even if it tested and cruised through it and went back down. Or
Right.
if it's, I should look also at your equal weight and at other indicators to make sure that I'm making the right decision at that point if it's above the red line.
I think that the best way that I can answer that question and is to first to stick with the 5-hour time frame chart for the NQ.
Okay.
If you and I knew at the beginning of the year that the NQ on a 300-minute basis was the only thing that we needed to trade to make bundles of money in 2018, we would have loved to have had that piece of information. What we know now, though, and we learned a month ago or so, and that's what I have up on my screen right now is a 5-hour chart, was that it has provided, based on the tools and the patterns that I use, that I share with subscribers in here on the show each day, that it has been the most consistent at identifying tops and bottoms. And so as you know, on this 5-hour time frame, the most recent signal came in at 5:15 a couple of days ago. And it did that because we saw that bearish engulfing candle. Plus, at that time, price was below Stevie's red line. So what took place today, intraday, and it's because it's a 5-hour time frame chart, I really have to stay with the 5-hour bar and wait for it to complete. So the bar that we're in right now completes in 15 minutes at 2 p.m. And what it did was it tested that oscillator and change line, Stevie's red line. Right now it's priced at 69.44. You and I know it will fluctuate up and down a bit, but it's held as resistance. And as long as this holds at resistance here, this says from the 5-hour time frame chart, which has provided the best tops and bottom signals, that this says that short is still in effect. And you would have wanted to maybe have sold, earlier as price was moving higher and you were taking a look at a retracement level. There was nothing on a daily time frame that would have given you a signal to sell into the NQ, because even if I go take a look at the market profiles out here, there's no market profile that price was running into, a couple of hours ago. So I'm sticking with the position that the NQ still wants to pull back. To what level, I'm uncertain of just yet. The one level that I feel confident that we're going to see is that daily chart that we looked at. And that right now, the oscillator on change line is priced at 68.68. So somewhere between where we're trading right now and the 68.68 is where price wants to go back there. And the reason why, Maria, I think that it wants to go back there is you and I could pull up basically every index chart and see that that's the test that we're waiting for. The weakest of the indices out here, I believe, is the is the Dow. And I'll put that chart up on my screen. Is that okay if I put that up on my screen too, just to take a look at that with you?
Mm-hmm.
Okay.
That'd be great.
So what we're going to do here, because if the market I don't say falls apart, but if it confirms that the sellers are still around and they want to drive price down, I believe that what we want to do is look for the weakest link out here. I'd suggest we look at the weakest possible link out here. And I believe that is still the Dow. Now, I'm going to pull up the Dow chart. And the reason I say that is its price oscillator is really just above the red line. So the reading is 29.41, whereas like in the NASDAQ and other indices, it's well above that level. When the price oscillator is above zero, but the price is below Stevie's red line, it just says retracement. It says retracement, or it could have been a significant high. But here in the Dow, as price meets that red line number, which is 24,546, if the Dow pushes below that red line, this price oscillator is going to turn down below zero. And when you turn down below zero, it just doesn't get much better than that for the shorts. That doesn't mean short forever. It just means that price, the side of the trade that you want to look at is the short side of the trade. So I would have one eye on the NASDAQ and one eye on the Dow right now to try to get a larger interpretation of what the market wants to do. And one of the reasons for us to take a look at the Dow itself is that money around the world is not flowing into the Dow. We know that money around the world is flowing into the Russell 2000. That's why we see this divergence with the Russell moving higher and the other markets, we're moving lower out here. I just have to try to give me a second here to pull that chart. And we know that. We know that unequivocally that money around the world is pouring into the Dow. And this is a one world type market out here. And here's the proof of that. Because in all major currencies, so the euro, the yen, and the Great British pound, as well as in the U.S. dollars now, we are above the January swing point high. And so any trader in any of these countries that is a momentum trader is looking at their screen saying, I want to buy a breakout. Where's money flowing into? Yeah, it's currency conversion, but it's real. It's really what's going on. Whereas if we try to go look at the Dow, priced the same way, give me a moment here to pull that up. What we're going to see as soon as I can post that on my screen out here is the Dow, which is really the trophy, the big trophy. It's where the big money players want to be. It's not breaking out. It's not above its highs out here in any type of currency. Let's see, this shot of pulled. Here's the Dow. So if we take a look at the Dow, well below its January swing point of 26,616. It's well below the swing point in euros of 21,461. Well below in terms of yen, and well below in terms of Great British pound. So this is just very clear to us that where money is actually flowing into. So if you were going to take a long position, because of your interpretation or my interpretation, I'd say you'd make it in the Russell 2000, not the NASDAQ,
Yeah. So it makes sense. Okay, no, I understood now, because I was getting confused between, the red line being tested and it went exactly above, and the fact that the price oscillator was positive. I was like, okay, I'm going completely crazy. Hey, stay
on through this break. We're going to go to a break right here. Stay on, and we'll finish it up when we come right. Welcome back, folks. So, Maria, who's asking folks, is asking really some great questions out here, and we're really focused on the NASDAQ. In summary, Maria, because of knowing that the 5-hour time frame chart for the NQ has provided us with the most consistent signals, that was the reason to go ahead and take a short position, as we did this morning. But knowing that, and I wrote inside the newsletter, this could be a very short-term trade out here. Not from the standpoint of wanting to get stopped out, but that once price gets down, once we see price and on the daily chart, the oscillator on change line, catch up to each other, then we really have a decision to make. And we'll just have to look at what goes on some other charts, preferably the 5-hour chart, to try to make some type of interpretation out here. The reason that I chose the NQ to go short this morning was because that, in essence, is where the signals were coming from. If we see signals that say that prices want to continue going even further lower, then we would add a position inside the Dow, assuming that price got below its daily oscillator on change line. That would be my thinking. At least that's what I would present to subscribers out there on the action that we should take.
That's wonderful. Thank you very much, because at least it clarifies what I had in mind. So it's perfect. Thank you so
Okay.
much for taking the time.
My pleasure. Thanks so much for calling.